On today's episode, we are going to take a look at what many consider the top 3 upcoming e-commerce companies. A lot of people compare them to the next Amazon. The first one we're going to take a look at is Sea Limited. Sea has yet to report earnings but has done amazing returns to investors. The second one is going to be MercadoLibre. This one did just report earnings earlier this week and is up after earnings. And the third one is going to be JMIA, which is down a nice amount after earnings. So we're going to see that not all these e-commerce businesses, e-stocks, are in the same state of their life. So in today's episode, it's going to be broken down into the following. First, we're going to take a look at just stock price performance, and we're also going to take a look at what each of these stocks do. What markets do they hit, and where do they hit these markets? Even though they are all e-commerce business, they also all have something differential among them. The second thing we're going to take a look at is their future growth. What type of, how strong is the revenue expected to grow in the upcoming years? Are they profitable right now, or are they expected to be profitable soon? The third thing we're going to take a look at is their balance sheet. Try to see if they do they have a strong balance sheet. If they're not making any money, I'm going to be extra tough on them and make sure that they have enough cash at hands to be able to survive while they're not profitable. And finally, the last thing is just going to be my thoughts, what I'm thinking of doing within all these stocks. So that's today's episode. And like always, if you are new to my channel, if you are a long-term investor, if you want to learn more about growth stocks, make sure to hit that subscribe button. To all my returning viewers, like always, thank you for the support. Make sure to hit the thumbs up. Make sure to let me know in the comments. Are you guys bullish on any of these companies, SE, MercadoLibre, or JMIA? And also, you guys know, if you guys ever need to get in contact with me, the YouTube comments is the best place, but you can also follow me on Twitter. I do have a free Discord channel as well, where I post all my portfolios and everything. And I do have a weekly newsletter at josenaharo.com. Everything I provide is free. But remember, I am by no means a professional, so none of this should be taken as advice. Make sure to talk to a financial advisor before doing any form of investing. And before we continue with today's episode, a huge shout out to Q, to Peggy, and France. They are my first memberships for this YouTube channel. That means they are supporting the channel, even though all the information that I provide is free. And from my portfolio to my Discord channel to all these videos, nothing here I charge for anything. They still went ahead and supported the channel. And if you guys want to support the channel, make sure to hit that join button. All right, so let's start off with C. C is the only one that has not reported earnings. Earnings for C is expected to be August 18th, so sometime next week. And if you guys want me to do a video on that, let me know in the comments. So C right now is sitting at $128 stock price. But like I always say, the stock price means nothing. What we really want to see is the market cap. What is this company really valued at? C at the moment has a market cap of $59 billion. Next, let's take a look at MercadoLibre. This is ticker MELI, and this one has a market cap of 56.92. So the market cap between MercadoLibre and C are really close. So to me, I do expect, and I have done research on both of them, they are both in similar stages in their business, right? And we can tell that by the valuation. The third one is JMIA, and this one is in a whole different ballgame. This one has a market cap of $1 billion. So in theory, this is about 50 times smaller than the other two we took a look at. So this is one thing that I think investors should always take a look at. Try to understand where they're at in their business, right? The market valuation doesn't really show you much, but if two companies are worth similar, like we see Mercado and C, it means that they're most likely in similar positions in their life right now with the business. When I see a company like JMIA, which is ticker JMIA, this one has a market cap of 1 billion, 50 times lower. So it's not in the same stage. Very similar to Amazon, right? Amazon's over $1 trillion. I'm not going to compare these companies to Amazon because Amazon is in a whole different ballgame. So this is the first thing I want to make sure to understand. It's always take a look at the market cap, try to compare it to its peers, and try to understand why it's at that level. So right, maybe the growth that we're seeing in C and Mercado Libre is not being seen in JMIA, and that's why we saw a drop after hours, and we are gonna after their earnings, and we are gonna take a look at their drop. So we can see, since, let's take a look in the past 6 months. In the past 6 months, C, which is ticker SE, has returned 163% to investors. MELI, ticker MELY, has returned very similar, has returned 57% to investors. So it hasn't been as strong as C, but it's still pretty high. But all of them have been in the market. And then if we take a look at JMIA, I'm hoping I'm saying it right, has gone up 133%. But if you bought JMIA at its peak, you are down about 33%, around 35%. So you lost about 1/3 of your portfolio already if you did buy at the top. But if you purchased on just 2 months ago, you are swimming in green right now in any of these companies. So congratulations to all the long-term investors. All right, so now that we see their stock price, we saw their market cap, and we saw the returns that they have for investors, let's try to look at how each of these e-commerce differ. So let's start off with C. C right now, to me, if I may be honest, is one of my favorites because it's the one I know the most about. And if you guys want to check out a full in-depth video on any of these, I will definitely make sure to post them on the description. But if not, make sure to just check out my channel. I had done one on C where I do a full analysis. I've also just recently did one on Mercado Libre. JMIA is the only one I haven't done, but if you guys want me to do one, make sure to let me know. All right, so let's start off with C. I'm just gonna do a quick explanation of what market they hit and what type of products they have. So C is an e-commerce platform in Southeast Asia and Taiwan. So they hit a lot of markets like Singapore, India, Indonesia, Taiwan, so all different types of countries in the Southeast Asia and Taiwan region. And the 3 products that they have is, the first one is the main product we're talking about is Shopee, which is their e-commerce business. And this, again, very similar to what Amazon is, where you can sell third-party items through there, and you have like a delivery system, everything that goes through an e-commerce platform. That's what Shopee is. Next, we have C-Money. C-Money is their fintech program. It's very similar to what I would consider like a Square, a PayPal type system, where you can use their e-wallets. You can pay through different applications with C-Money. And the third one is Garena. Garena is their esports, their e-gaming platform. And to me, this is my favorite thing about C. C hits all the markets that I'm very bullish on. I'm very bullish in e-commerce. I'm very bullish in fintech. And I'm very bullish in esports and the gaming platform. The valuation is something we may have to take a look at later on, but they are in markets I believe are pretty bullish. Next, let's take a look at Mercado Libre. So Mercado Libre is very similar to C in certain aspects, except they hit most of Latin America countries. They hit countries like Brazil, Mexico, they hit Argentina. Let's see, they hit a lot of Central Americans. If we go to MercadoLibre.com, we can see a lot of the other countries that they hit, but I think the 3 main ones that they talk about is Mexico, Argentina, and Brazil. Those are their biggest, but they have Colombia, they're all in Latin America. So that's how they differ from C. They also hit different markets. So the similar markets that they have to C is they have the commerce business and they have the fintech business. Mercado Libre, C might have a platform like this, but it seems like Mercado Libre has a more established platform in their shipping. So when I mentioned how C was a mixture of Amazon's e-commerce, of Square, and it was also a mixture of some form of gaming platform, Mercado Libre has the platforms very similar to Amazon. It has the platform very similar to Square or PayPal. And then it has a shipping industry, which is very similar to like UPS or so. And the main reason they do this is because they don't want to be reliable to other shipping platforms in their countries. And some of these countries might not have a fully developed shipping business all over the countries. So to not rely on other companies, they decided to create their own platform. So like I mentioned, so we saw C is in Southeast Asia, Mercado Libre is in Latin America, and then we have JMIA. I'm hoping I'm saying this right. To what I believe, I am not saying it right. But this one is an African e-commerce. So this is, they definitely, if we take a look later on, if you guys want me to do a full analysis, we can see all the different countries that they hit. But they hit all parts of Africa, from North Africa, South Africa, East to West Africa, and they tell you the countries that they're in. And now about JMIA, they tell you they are the leading Pan-African e-commerce platform. They do marketplace, they do logistics services, and they do payment services. So very similar to, so here, one thing I want to say, I mentioned three things. I mentioned marketplace, logistics services, and payment services. I didn't mention logistics for the other three platforms because that's already included in their e-commerce. Here, I guess JMIA just wanted to show that they're in different platforms as well. But the logistics and marketplace are very similar to what we saw in C and very similar to what we saw in Mercado Libre. They are also in the fintech, so we can see all of them are very similar. I do like C a little bit more because it has that gaming aspect, but all of them do have that e-commerce and that fintech business. And here, if you want to go check out their website, let me zoom in for you guys so you can see. So you can see a little better. They kind of explain what the different products they do in the marketplace. They do everything from restaurant food delivery, hotel and flight bookings, classified advertising, airtime recharge, and instant delivery. So if you need to add some data to your phone, you can do it through them to add rechargeable minutes to your cell phones. And then the logistics is very similar to what all the platforms, and the JMIA Pay is again very similar to all the other platforms in the fintech world. So again, all of them are very similar. The great thing is they're all in different markets, and they are in markets where Amazon at the moment is not truly strong there. So a lot of them are taking advantage right now that Amazon is not in some of these countries, and they're building up that reputation right now. So if Amazon, which I'm pretty sure would try to come in sometime in the future, they already have a name for themselves. They already have a customer base. All right, so now that we understand what they do, let's take a look at their expected growth. So let's start off with C. C is right now, its revenue is expected to grow 27.6% on average annually for the next 3 years, right? This doesn't mean for the next 3 years it'll grow 27%. This year might grow 50%, the next year might be 20%, and the year after that might be like 5%. But on average, within the next 3 years, annually is expected to grow 27%. This is faster than the industry, which is 13.9, and this is faster than the market, which is 9.5. So any company that is growing over 20%, many consider a high growth stock. And to be growing faster than the industry and faster than the market, that is showing that it's not only a growth stock, but it's also a growth stock in its industry. Next, when we take a look at earnings, C is growing its earnings faster than the industry and faster than the market in similar time, right? Their earnings forecast growth is expected to be 65% on average annually for the next 3 years, where the industry is 44% and the market is 25%. Normally, when I see a company's earnings growing faster than the industry and the market, it only means one thing, that right now they're most likely not profitable, and they are expected to become profitable within the next 3 years. And right, going from unprofitable to profitable and getting those profits higher and higher each year usually jump in high percentage because you're jumping little values. And we can see here, right now, C is not profitable. They are not expected to be profitable until the mid of 2022. This is when the line crosses into profitable. But by the end of December 30th of 2022, analysts expect this to finally be a profitable company. So C has really strong revenue growth, and it is expected to be profitable within the next 3 years. Next, let's take a look at Mercado Libre. Mercado Libre is also growing at those fast levels, 29.4% annually for the next 3 years. Its revenue, where the industry is 16.7 and the market is 9.5. So again, this is a fast grower in revenue, and it's a fast grower within its market, its industry as well. Very similar to C, we see it's expecting its earnings growth to be a lot higher, 65.6% growth annually on average for the next 3 years, where the industry is 33, where the market is 24. I'm gonna be safe to assume that MELI is very similar to C. And yes, look, for the upcoming year, MELI is not expected to be profitable until the end of 2020. So until the end of this year, they are expected to be profitable, but very, very low margins. And this is normally what you see in the e-commerce. So what we see with MELI, we see it being a little bit more profitable, being profitable faster than C, but we see it growing at a fast rate, very similar to C. But this is actually growing a little bit faster, where revenue for MELI is growing at 29.4% annually on average for the next 3 years. C is growing 27.6%, both really fast, but I just want to say MELI is growing a little bit faster. I don't want you guys saying that I'm just a C bull, right? I'm trying here. I'm just looking at numbers, and even though I might say C is my favorite, I'm here showing the numbers, and that's all that matters. Next, let's take a look at JMIA. I am pretty sure I'm saying that. I've said it so many different ways. Ticker JMIA. This one is expected to grow its revenues at 23.5%. So it's still annually for the next 3 years. So it's still growing faster than the industry, and it's still growing faster than the market, but it's growing slower when we compare it to C and when we compare it to MELI. Earnings are growing, but growing at a slower pace compared to the industry and the market. And I can see something here that JMIA is not expected to be profitable within the next 3 years. Within the next 4 years, analysts still expect this company to be burning money. So we can see they're all in different stages in their life, and this is things we need to take a look at when investing in companies like this. So it's still a fast grower, but it's not expected to be profitable anytime soon. All right, so the next thing I want to take a look at is their balance sheet, and I think after the balance sheet is just my thoughts on these companies and which ones I really like, or if I like any, or if I hate any. So next, let's start off with C. See their balance sheet right now. And here I'm just going to do something really quick. I just want to take a look at their cash right now and compare it to how much debt they have. The things we saw is none of them are expected to be profitable. The worst one we saw was JMIA, which is not expected to be profitable anytime soon. The other two are expected. So the first thing I want to make sure is they have enough cash compared to debt to be able to survive not being profitable for some time. So that's the first thing I want to take a look at. So first, we're going to take a look at C. C has about $2.6 billion of quick cash. They have $1.4 billion of debt. This is a mixture of short-term debt and long-term debt. But regardless of that fact, they have enough cash and short-term investments to pay off its total debt and still have plenty of cash left over. So to me, that's a great thing. Next, let's take a look at MELI. MELI has about $2.8 billion of cash and has about $1.2 billion of debt. It has a little bit more cash than C, and it has a little bit less debt than C as well. So this one has a better balance sheet in my opinion. And again, very similar. It has plenty of cash to pay off its total debt. So that to me is another good balance sheet. The next one we're going to take a look at is JMIA, and this one I'm going to be a little bit harder on because they're not expected to be profitable anytime soon. So I want to make sure that they have a lot more cash than their debt, and it's looking really good for them. Right now, they have only $200 million of cash or short-term investments, but we can see they are in a different stage. They don't have the amount of money that C has. They don't have the amount of money that MELI has. But look, they have no debt. And here we can see in Simply Wall Street, it tells us they have had no debt for the past 5 years. So that to me is pretty impressive. This is a great balance sheet for a company that's not expected to be profitable. So that to me gives me it gives me at least some hope in this company, because even though it's not profitable, it doesn't have debt to worry about. It has cash, so it can keep moving, chugging along. All right, so now those are the three things we wanted to take a look at in today's episode. All right, so now my thoughts. The first thing I want to say is we noticed that two of these companies are in very similar stages in their life, where one of them is not. And this really determines how they will go in my portfolio. And right, my portfolio, my investment style might be completely different than yours. So these are just my thoughts. MELI and C. Both of them are ones that I especially see for me, because it is in the e-commerce, because it is in the e-payment, and because it is in the e-gaming. It's one that I can easily see in my top 10 holdings, and at the moment it is on my top 10 holdings. MELI is one that I can see very similar to C. I personally prefer C over MELI, but not by much. MELI would probably hit like my top 20 for sure, maybe my top 15. Very similar market. The only thing is, because it's not in the e-gaming business, it's not in that final business that I'm really bullish on. If it was, it would be right up there with C, and it's one of my favorite companies right now. But it's still showing very strong growth. It has it's showing a growth faster than C. It has a stronger balance sheet than C. So even though it's not in the markets I'm in, within the markets it is in, I feel like it's a bit stronger than C. Finally, we're going to take a look at JMI. This one, completely different position compared to the other ones. So this one, I would say, is for me a lot more risky than the other two. The other two might be risky because they are volatile, so it's important not to get emotional with volatile stocks. But I'm looking for long-term investments. For all three of these companies, I feel if they continue in the path they're going, and all three can end up being multi-baggers for me. The only thing is, I feel like JMIA is a little bit more risky than the other two. All of them are going to be very volatile, and we're seeing them right now. C has gone as high as 150 and dropped as low as 100 in the past, 100 and something in the past month or two. And MELI is the same way. JMI has dropped a lot. And we can see, right, they are all in different markets. They are all in different stages. But to me, right, JMIA is definitely not one that would make it in my top 20, maybe not even my top 30 stocks in my portfolio. But C would definitely hit my top 10. MELI would hit for sure my top 20. JMIA is one that I would have, and I am going to add a bit more onto to maybe get it to like my top 30 type holdings. They're all in similar markets, and right now, my investment style is a dollar cost average to build up a position. So obviously, C and MELI are ones that I would buy more often compared to JMI, but I personally like them all at the moment. One thing I did not talk about, which I want to talk about right now, is the reason JMI stock dropped a lot during their earnings. And the main reason they dropped a lot is right now, due to the whole COVID-19, all these e-commerce have been doing amazing, right? They're showing a lot more, better results than expected. And the main way you can kind of see the overall standard of e-commerce is seeing how many products are sold through that platform. If you're seeing an increase in growth in those platforms, it means more and more people are selling there and more people are buying there. MELI showed a strong increase of products sold in their platforms. C at the moment hasn't reported earnings, so that's something we are going to expect it to see. But JMIA actually saw a decrease of items compared to the same times last year, of value, not items, of value sold this quarter compared to the same time last year. So people are saying, hey, this was supposed to be an e-commerce. This was supposed to be a bulletproof COVID-19 stock that was supposed to show amazing results, but it didn't. And I do believe that is the main reason this company is down. So like always, guys, I hope you guys enjoyed today's episode. Like always, make sure to hit the likes, make sure to hit the thumbs up, make sure to let me know in the comments what you think. And again, thank you for those that signed up for the membership. It means a lot that you believe that I bring some form of value to you guys, that you are willing to support the channel. So thank you so much. Have a good day and take care.